Welcome back to this Money Control live stream. You're watching a closing bell with me, Nandita Khemka. Well, it's been a very tough week for the market. For the week, the Nifty and Sensex have shed anywhere between 2.5 to 3% apiece, and the pain has been clearly visible in the broader end of the markets, right? Because if you look at the mid and small cap indices, today as well, the mid cap index was down 2%, small cap index almost 3%. But for the week, both the mid and small cap indices have shed anywhere between 5 to 7% apiece, and some of those stocks, mid cap stocks, have shed anywhere between 15 to 20% as well. So yes, the pain is clearly visible across the broader universe. Of course, on the index front, we have broken below that crucial level of 23,460. Why I say it's crucial is because that was a December low that we had made on the Nifty, and that has been violated because the Nifty ended around that 23,430 mark. Almost a triple digit cut coming in today as well, and the entire week we've seen feeble attempts at recovery, but they didn't really sustain. Even today, for that matter, at one point in time we'd managed to edge back into the green, but once again, we gave in to selling pressure, and we ended where we did. Before I talk about the sectors and stocks, looks like the bears have taken the 90-hour week comment pretty seriously, because it's the bears that have been working overtime, and look where we are at the current juncture. But talking about the advanced decline ratio, very dismal once again, 1:6. That was the NSE advanced decline ratio. All the sectors, barring the IT pack, of course, that was the bright spot in today's gloomy trading session. All the other sectors were trading in the red, deep in the red. Look at the Pharma, IT, PSU bank, even bank, Nifty bank index for that matter, broken below crucial support levels. In fact, it's even below that 49,000 mark. 48,730 is where it's at the current juncture. So yes, for banks as well, crucial levels being broken on the downside. Look at the top Nifty losers. You have financial names like Shriram Finance, IndusInd Bank. Those were the top laggards. Adani Enterprise and some PSU names like NTPC, BEL under severe selling pressure. On the gaining side, of course, top 5 stocks on the Nifty were from the technology pack, and no points for guessing, it was TCS that was driving the gains. TCS was up in excess of 5%, Tech Mahindra, HCL Tech, Wipro, Infosys, all of these companies who report earnings next week, trading with positive gains in positive bias. Aside of that, some of the other movers, JSW Steel was one that did well, and so did SBI Life, Bajaj, Finserv, as well as Bharti Airtel. From the broader end of the markets, you had some movers as well in terms of gainers. You had RK Forgings, Anand Rathi Wealth, that will be considering a bonus issue next week. That stock was up and about, and so was LTI Mindtree. On the flip side, Adani Wilmar, OFS happening there, promoters cutting stakes. So that stock was down almost 10%. GIC, Tata Elxsi on the back of poor earnings, and Aegis Logistics. These are some of the other laggards on the Nifty 500 index. But on that note, let me bring on board our guest for today. Joining me is Sameet Chavan, who's the head analyst, technical and derivatives at Angel One. Sameet, great to see you, on the show, and of course, wishing you a very happy New Year. But the mood in the market is far from happy. We've broken below the December lows. Now we are looking at November lows as well. Where do you think this market will take support, and how do you expect trade to pan out next week?
Good evening. Hi, Nandita. Thanks for having me on your show, and happy New Year to you as well. And yes, obviously, if you look at the market, it has not been the happy start for our market, but it's too early to take that call. Overall, if you see, market, last week we had seen a decent pullback towards 24,200, but we maintained our caution stance, till the time Nifty does not cross 24,500, 24,200 band. And clearly, the kind of fall that we witnessed throughout this week, it clearly prove significance of 24,200 and 24,500. If you compare Nifty with other major indices like Bank Nifty, mid cap index, for Nifty it has been a slow poison, and today also, if you see, Bank Nifty tanked quite sharply. Mid cap index has tested 200 a simple moving average, but we do not see major cut in Nifty 50 today, thanks to IT, which has been the solitary knight in the shining armor today. But the slow poison is likely to continue from here on, and will not be surprised to see Nifty heading towards 23,200, 23,000, and probably sub 23,000 territory is likely to be tested soon.
All right, that's not something that we would want to hear. Sub 23,000. Of course, the support levels keep going down for the index. But since you mentioned IT, after the kind of up move we've seen, and even on on an yearly basis in the last 2 years, IT has consistently been outperforming the index. If you look at the IT index, gained 20% last year, and even last to last year we saw 20% gain. If you look at some of these large cap names like TCS, Infosys, you've seen that Infosys has been an outperformer, at least between the two, TCS and Infosys. But if you have to go out and buy large cap names right now, where would you find the risk reward?
See, clearly, if you see, IT has been bucking the trend, but it has been a curtain raiser. It has just kickstarted. The earnings have kickstarted, and TCS has shown some encouraging signs as such. But we would rather wait for next couple of weeks at least, wherein you would see Infosys, Wipro, HCL Tech, they would be declaring their numbers, and once we see earnings from all these major players, the reaction in the market, and then probably one can take a call. Because risk to reward wise, as of now, you don't get that better risk reward in the entire IT space, because it has been stable. Price wise, we have not seen much correction as such. But if we have to rank as per our preference, TCS, Infosys, and HCL Tech would be our preferred stock within the large cap IT names.
What about the mid cap names like Persistent and Coforge? They have already done, have seen quite a strong rally on the long term charts. Would you look at that as a short term play as well?
No, I think risk reward wise, we would avoid Persistent, Coforge, the mid caps name. And if you have to correlate with the mid cap indices as well, as I said, mid cap index has fallen below its important support level. It has tested 200 simple moving average. But the kind of structure that we are witnessing on weekly time frame charts, it certainly does not augur well for the bulls. As far as Persistent is concerned, yes, it has been one of the rank outperformers, within the mid cap ID names, but we would expect some consolidation. And in case if you see any price wise correction, with a slightly medium to longer term perspective, then 6,000, 5,800 is, these are the important levels to watch out for. In case, in next couple of weeks time, if we get Persistent around 6,000, 5,800, that is the level to get into this product.
What about the CGD stocks, city gas distribution stocks like IGL and MGL? They've got an upgrade from MK. Of course, with respect to APM gas allocation, the government has reversed much of the cut that they had rolled out in a matter of months. The stocks did see knee-jerk reactions, and if you look at the 3-month, 4-month charts, you'll see significant scale down in stock prices. But over the last 2 months or so, there has been some bit of recovery as well. Should one be looking at these stocks now?
Honestly speaking, we don't have great track record when it comes to city distribution gas companies. We have seen so many deceiving moves over the past 6 to 8 odd months, whether it's MGL, whether it's IGL, and these are the preferred stocks within this space. As far as MGL is concerned, the overall trend remains bearish, because during the period of September 24 to November 24, we had seen massive correction in MGL, which is now followed by some sort of time-wise consolidation. So we believe that with a short-term view, yes, you could see further retracement towards 1400, 1500. But with a larger view, in case MGL comes around 1450, 1500, we would rather exit this counter rather than getting into this particular counter for slightly medium to longer term perspective.
For the last few sessions, couple of sessions, so to say, FMCG stocks have seen a good turnaround. You had likes of HUL Britannia holding out today as well, even Tata Consumer. Would you be a buyer?
Yes, we would certainly wait for certain levels to break. As far as Dabur is concerned, we are keeping a close eye on Dabur, and this stock has been consolidating. And it seems that if you look at the daily time frame charts, the overall volumes and placement of its moving average, it appears that the stock is in a process of forming a base around 500, 510. So 525, 530, these are the important levels to watch out for. In case Dabur gives a breakout, you could see a great move unfolding from there on, and then 560, 565, these are the next important levels to watch out for. And yes, Hindustan Unilever, which has been doing well, whenever this particular stock reaches 2300, some sort of buying tends to emerge, and this is clearly what we witnessed in last couple of weeks time also. Stock has been bucking the trend if you see overall broad-based sell-off in the market. 2500 is the immediate hurdle wherein we can see a coincidence of 89 exponential moving average. So once the stock surpasses 2500, 2520 on a daily closing basis, you could see a good move in coming days as far as the HUL is concerned.
All right, that's the call on FMCG. But I want to talk to you about some of these names like REC, PFC. Stuck in a downtrend. For the week, REC is down 15% or so. Do you see more weakness on the charts for some of these names? REC, PFC. Should one steer clear? What's the strategy here?
Yes, in fact, we have been closely monitoring this stock, since the start of this week. And as a disclosure, we had recommended, put options to our clients as well. We have already booked those profits, but considering today's massive sell-off in both REC and PFC, it seems a structural breakdown in this counter. As far as REC is concerned, after a very long time, probably 5 to 6 months of time, stock has broken down below 470 on a closing basis. So we expect further correction in REC as far as levels are concerned. 430, 410, these are the next levels to watch out for. And as far as PFC is concerned, there's a breakdown in PFC as well below its important support level of 430 on a closing basis. Now, next important cluster to watch out for would be around 368, 359.
Okay, IREDA, that's another stock I want to take stock of. Asset quality worries. Asset quality has worsened in the third quarter. Numbers came out yesterday. The stock was just down 2% or so, but the stock has been a rank outperformer, right? If you look at the last 1 year, phenomenal returns. But this year, since the start of the year, there has been some kind of a reversal, so to say. Is it a turnaround, or are you expecting more downside from here? How would you look at the charts?
See, overall, if you see, the price data is not much. We hardly have 12 months price data for this particular counter. So hence, we do not know how this particular stock behaves in, different phases. But considering the recent price action, the stock seems to have a defined price range. And in such kind of market wherein you are seeing, individual stocks correcting 4-5% in a day, it would be difficult to take a call whether this particular stock would outperform or not. So this stock at least has a defined range: 235, 240 on the higher side, and 180, 190 on the lower side. So this seems to be a consolidation range for this counter, and till the time we do not see a decisive breakout on either side, this time wise consolidation is likely to continue. So in case of buyer, the buying scenario, wait for a breakout to happen beyond 240, and then you could see a good 15-18% move in coming weeks. And on the low side, if stock slides below 180, we do not see any major support, before 140, 130 in discount.
Okay, that's the view. Let's talk about in fact, one of the railway stocks then, IRCTC. Macquarie has initiated an outperform call on the stock. Target price is at 900 rupees. They've said that the company is generating 30% free cash flow margin and 30% plus ROE and ROIC. It has a strong net cash position as well, and the brokerage has pointed out that it sees it on a path to 2x returns linked to India's railway modernization ambitions. Of course, railway stocks have cooled off quite a bit from their highs, correcting as much as 15 to 20% from all-time highs. But ahead of the budget, is it a good play? IRCTC, the kind of levels that Macquarie has pointed out, 900, could that be looked upon at ahead of budget in terms of expectations railway and defense, how would you play that ahead of the budget?
See, as far as IRCT is concerned, it's been a laggard for last, I guess, 4 or 5 months continuously now. And honestly speaking, it has not lived up to its expectations. Now, ahead of the budget, the one positive thing is the stock has now reached its major, important support cluster of 750, 740. This is the place wherein the stock gave a breakout last month, last year itself, around 750, 70, and from there on the stock literally took off towards 1100. Again, it has now retested those breakout point. So in case of any positive development in this counter, this is the best place to get into this counter. So one should accumulate this counter in a range of 750, 730, and the trend confirmation would happen only beyond 850. Once the stock surpasses 850, which is the multiple resistance zone, major moving averages coincide around 850. Once that happens, then yes, 900 plus levels are quite possible at this time.
Okay, 900 levels are possible on the charts of an IRCTC. But one stock I want to ask you about is Kalyan Jewellers. Although the third quarter business update was fairly, strong, the stock was under selling pressure. And in fact, I think Kalyan Jewellers is one of the top losers for the week. It has, of course, outperformed the likes of Titan, last year. But, chartically, do you think the trend has reversed?
Yes, seems so. It has completely reversed now. The kind of sell-off that we witnessed in last 4 5 trading session. Importantly, it is backed by robust volume. So that suggests that the tide has turned downward for this counter. And on the daily time frame chart, structurally, the stock has now confirmed its lower bottom. So in case of a pullback 700, 720, this stock is likely to meet with some sort of supply, and hence any bounce back is likely to get sold into. So at least in the near term, 600 is likely to be tested quite soon, and once the stock slides below 600, then 560, 575, these are the next levels to watch.
All right, those are the levels to watch out for on Kalyan Jewellers. But before we call it a day and a week, Sameet, any recommendations for the next week? Looking at where we are at the current juncture, are you spotting any opportunities?
Yes, we are definitely spotting opportunities, but that with the in line with the direction of market, so it would be on the short side. So BHL is the one stock that we are liking. Stock has breached its important support level, and if you see, most of the PSU names are sliding below their important supports. So BHL is the one stock that is likely to continue its weakness. 190, 192. These are the important levels to watch out for. So as a short-term trader, one can look to sell around on a bounce around 206, 208, stop around 212, and target would be 190. And second short call would be on the PSU name Bank of Baroda. This stock is now challenging its recent swing lows of 222, 224. So one can look to short with a stop around 232 and target would be around 214.
All right, those are the recommendations coming in from Sameet. With that, Sameet, would like to thank you for taking out time and joining in this afternoon and sharing your thoughts with us. Let's hope we see some bit of buying support coming in next week, because right now, of course, was a very difficult week for us. We shed 2 to 3% on the index level, and pain was, of course, much deeper when it comes to the broader universe. Thank you, thanks a lot, and I hope you have a great weekend. Well, that's the market action then for the week. Not very encouraging. In fact, bears have flexed their muscles, and below that December low of 23,460, and as Sameet was pointing out, we could look at falling below that 23,200 or even sub 23,000 levels, in the coming sessions. But let's hope that doesn't really happen. But with that, completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Have a great weekend and come back and join us on Monday morning with Opening Bell. Thank you.